Hold on. Give me a second. Let me go back to here. Sending data, streaming. We're good to go. Cool beans.
All right.
Bloody roty then. Thanks, Bachi.
You're very welcome, Dada. I hope you have a good stream.
Talk to you later.
Bye.
Alrighty. So, let's back up a little bit. Get YouTube, Yahoo Finance. Hold on, I'm still getting set up. Frustrated with your computer? That's funny. Okay, Yahoo Finance is opening up. Give me a second. Right there. And right here. Intel looks good. And we're going to leave it at that. And we are good to go. Alrighty, so let's get started. All right, so I'm going to back up everything and say hi, hello to everybody. So give me 1 second before we are ready for this. There's nobody on TikTok. No, wait, there's nobody on Instagram. And there's nobody on Facebook. Why do I broadcast to those channels if there's nobody there? Boggles my mind. All right, so let's do this. Let's change the camera angle here. Okay, here we go. Everything looks normal. Now let's open this up over here. Slide all the way back to the beginning so we can say our greetings to everybody. And here we go. Greetings. Look at that. CP's here. Madison. Ooh, interesting way to spell that. Dude, shoot. Nicholas Hampto. Okay, Junior. Knack. How's it going? Koozie. El Hosan. Josen, okay. Latitude Studio, what's happening? V-Dove, lovely name. Okay, no name there. Carol, Charlie, Michael, Scott, Debbie. Debbie was wannabe, that's cool. Mark Capo, cool. Apple user, Elliot. Dre Day, 42. Ricky, Dez, Big Country. Eros Lux, okay. Oh, Dem, what's happening? Matthew Baker. 4477. Frank, what's happening? Lloyd, what's going on? Freedom. Texas, Mom, good evening. Sibo, Canadian BTC. Michael Dean, what's happening? My Tom, okay. Melatonin wants to take a look at AT&T. I'm going to need the glasses for that one. Uh-oh. What the hell do I do with my glasses? Shit. All right. Sit tight. I'm going to get a pair of glasses so I can see the screen. All right, hold on. Be right back. Entertain yourselves. I need a pair of glasses. Honey, what do you do with my glasses?
I don't know, honey.
All right. Hi, Connor. Right, where did you put them? I was going to use the blue ones, honey. What do you think? Goofball. All right, we got a choice. We got the blue glasses, or we got these glasses. Yeah, these ones make more sense. All right, anyway. So now I can see better. All right, let's take a look at AT&T, first one on the list for the evening. Now, before I get started, let's try it one more time. Here we go. Now, before I get started, let's get started with the niceties in life. Okay. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow using a simple, safe, predictable, and consistent 1% per week trading strategy that I created for my 9-year-old daughter. Now, back in 2008, when my daughter was 9 years old, she jumped up in my lap one day and said, "Daddy, what are you doing? Can you teach me?" So here's the thing. How do you teach a 9-year-old to invest in the stock market? A lot of adults, a lot of you guys here don't quite get it yet. All right. So for a 9-year-old, it had to be simple, safe, predictable, consistent, and no way for her to lose. So I came up with a couple of rules. Okay. Rule number 1, never buy a stock you don't want to own. If you don't understand it, if you don't want to own it for the rest of your life, don't buy it. It's actually that simple. You don't understand it. You don't know the highs, the lows, the profit margins. If you don't know all that stuff, don't buy it. Don't be playing this game if you're not going to put your money in a safe place. All right. Rule number 2, Never sell at a loss. It kind of defeats the purpose of this whole game. And it is a game. Think about it. You're putting your money in, you're taking a look at it, and you're making sure that you're consistently profitable. Okay. Rule number 3. Make sure the company is consistently profitable. Now, me personally, I like 2 decades. That's 20 years of consistent profitability. How do we find that? Well, I go straight to the dividends because here's the thing. There's 9,968 different companies I can join. Now, there's a bunch of different sources you can get your information from, but the source that I have, you know what? We have time tonight, so let's take a quick look at it. And we are going to go and find out exactly how many stocks there are available. Right, for that, we are going to use FinViz, Financial Visualizations. It's a nice little website. It allows you to take a look at a lot of different things. And we're going to point out a few of them. Now, first, I want to go to the screener. See it right here? The screener. That allows me to screen what stocks I want to take a look at. Let's get out of that. I don't want that. Right here's the screener. Here we go. And right here, here's the number right there I want you to pay attention to. Let's get rid of this. Okay? That's the number I want you to pay attention to. 9,976. Now, last week we checked, it was 9,968. Well, we're at 9,976 this week. That means a bunch of stocks actually are available that weren't available last week. Okay, fine. So, out of all of those, how do you find out which ones you want to invest in? Well, for me, I want a simple, safe, predictable, consistent 1% per week. The only way I'm going to get 1% per week is sitting in front of my computer. No, that's not going to work. Or companies that have weekly options. So, yep, we are going to be talking about weekly stock options. Now, as I explain it to you, it's going to make sense. Because out of everything I say, there's one thing I want to eat upon your brain, and that is, does it make sense? That's it. Does it make sense? It either does or it doesn't. You got 2 choices in life. Because humans are the only species on the planet that got to pay to live here. We have to pay to live on this planet. That means we need money coming in all the time. Now, I'm an American. I'm blessed. Thank you. I didn't have a choice. This is where I was hatched. However you want to look at it. Okay, but here, it costs a certain amount to live a certain way. Now, the way that I live, okay, I don't have a beach house. Okay, I don't have a lake house. I just have a simple house. I'm a simple person. I don't like big, ostentatious things that brings attention to myself. I like to be in the background, left alone. I want to be the guy in the crowd you don't notice. That's who I want to be. Okay, I want my bills paid. I want a nice income coming in, and I want to be left alone. Pretty simple. Okay, I don't know how many other people are just like that, but back to the point. I need weekly cash flow in order to do that. Now, you got 2 choices. 1, you can take responsibility for your own money and do it yourself, or 2, give it to someone else and let them do it for you. Now, I can pretty much guarantee with 99.9% accuracy, nobody has more interest in your money than you. Maybe your wife's lawyer or your ex-husband's lawyer. I don't know. But seriously, nobody has more interest in your money than you do, so you either take responsibility, do it yourself, or give it to someone else. Okay? I like to do it myself. Weekly cash flow is what I'm looking for. So, out of the 9,976 companies, how do we find the ones that we want? Well, I got 2 criteria and only 2. That's it. You think it'd be simple. 2. 1 is consistency of profitability. So, you have 2 different kinds of companies. 1 will take all their profits and put it back into the company for capital growth. If that's what you're looking for, if you're looking to find a stock for $5, $10, $3, $20, $30 and have it shoot to the moon, you're in the wrong place. That's not what I'm doing. I'm looking for cash flow. I honestly really don't care about the company only if it is consistently profitable. That's it. If you can run a company for 10, 20, 30 years and be profitable every single year, that's where I want my money to go. You guys can do whatever you want. I'm just showing you what I do. All right, so out of that 9,976, we're going to check off right here. Okay, this little dividend yield, that will tell me who pays a dividend and who does not. So right here, just any dividend right there. See? And there you go. 5,764 companies actually share their profits. If you want to break it down even more, over 4%, 2,000. That's still a lot to go through. All right, let's get out of this. Guys, so many ads on this page. Over 8%. Ooh, 8%. 608. Okay, so this will allow me to break down by who pays a dividend and how often they pay. But what's more important to me is, do they have weekly options available? I have two criteria and only two. One, I already told you, consistency of profitability. Two, weekly options only. I'm either going to sit in front of my computer or I'm just going to do, a couple of trades, be done. That's it. All right. So that being said, I'm looking at companies such as the Dividend Kings, 54 companies that have increased their dividend payments to their shareholders for more than 5 decades. That's 50 years. Some of you guys haven't even been alive that long, yet these companies are profitable every single year, higher and higher and higher and higher profit. You cannot become a dividend king unless you have 5 decades of consistent profitability. That means more money this year than last year. Next year, more money. The year after that, more money. Consistently profitable. The numbers should go up higher and higher and higher every single year. There's only 54 of them. 5 decades of increased profits. Okay, so now you get the dividend aristocrats. 67 companies that have increased their dividends for at least 25 years. And now you have the dividend champions. 150 companies that have increased their dividends for 25 years. Now, there's a little bit of difference between the champions and the aristocrats. You can basically tell by the name. Aristocrats are a little bit more snooty, and they have a little bit more rules. But list number 4 would be the dividend contenders. 300 companies that have consistently increased their profits to their shareholders for 10 to 24 years. Not quite a dividend king, not quite a dividend aristocrat or a champion, but still 10 to 24 years. And then just for the fun of it, list number 5, we're going to throw in Warren Buffett's list because I got that, itching feeling that if it's good enough for Warren, it's good enough for me. We all know who he is. So if he makes a good pick, I'm going to pick the same thing. Simple. 5 lists right there. 300 different companies. So what do I do with them? I take them all and I throw them in to a calendar. Okay? We all know what a calendar looks like. March 2025, that's this month. Each one of these little green dots represents a company that is going to pay a dividend. Why is that important? Well, because just before the dividend is paid, the stock has a tendency to increase in value. So if the stock goes up in value, that's some important information. If it does it consistently. If Tootsie Roll, Tootsie Roll, increases just before the dividend, wouldn't it be a wise idea to buy it or do some kind of a trade just before that? Because you have a good idea which way it's going. Now, stocks only move 2 different ways, up or down. But they only move for 2 different reasons. And only 2 reasons. One is what's called an unknown reason. Well, you have no idea why it moved. Let me give you a couple examples. Okay. So Apple had a big, huge lawsuit. Nobody knew it was coming last year, and stock dropped. 3M had a lawsuit last year. That stock dropped. Okay. Exxon Valdez. I don't know if some of you remember that. Crashed up in the Northwest, spilled oil all over the place. Yep, that stock crashed. Nobody knew that was going to happen. British Petroleum sprung a leak in the middle of the Gulf of America. So nobody knew that was coming. But all of a sudden, their stock tanked. An unknown event, hurricane, blizzard, tornado, tsunami, something you don't know that's coming that just appears one day. That's an unknown event. All right, it's 9:32. We're going to do a quick reboot on TikTok because that number is ridiculous. And don't go away. I'll be right back. So you guys sit tight. And we're going to reboot on this thing. Okay, so let's try it again. Ooh, what the hell did I just do? All right, well, let's go out of there.
Fold up. How small does it fold up? You can put it in your bag.
Now,
Put it in your bag.
here, alive. So you guys over here just sit tight for a second. We're going to get this thing going again for some strange reason. The numbers, what is going on with Instagram and Facebook? Those are terrible. All right there. Here we go. There. And they're going to be back any second. But while I'm waiting for them, as I was saying, the two different reasons. Okay. One is an unknown reason. Something that happens that you just don't know about. It just pops up. I could give you a good for instance. Why does Weight Watchers goes up at the beginning of the year? Well, we all know why Weight Watchers stock goes up at the beginning of the year. And then you have other stocks like Hershey. Hershey goes up the first week of February. Well, why? Well, you got Valentine's Day, and then just after that's coming Easter, the two biggest chocolate days of the year. So yeah, Hershey goes up in the first couple of weeks of February. Certain stocks move a certain time of year. That's called a seasonality. Well, we know it's going to happen. That is a known reason. Two different reasons. A known reason, what we know is coming. Okay, dividends, earnings, stock splits, anything that the company can say, hey, this is what we're having this day, plan accordingly. Right? That's a known event. We know it's coming up. We know we can plan for it. So a dividend and earnings, these are dividends. Let's click on earnings for a second. Okay? The blue and purple, those are earnings reports. Okay, we can plan for those. Now, I personally don't like earnings reports because I've seen positive earnings where the stocks go down. I've seen negative earnings where the stocks go up. There's no real rhyme or reason to earnings. Okay. Are you a dividend investor? Logan's Run. Ooh, that was a cool movie. I don't even know if you remember that movie. Chris, Plentiful Plumber, how are you doing? Dennis, DJ Stonk Ape? That's interesting. Doesn't really flow. Okay, no, don't get me wrong. I understand that, you DJs want to do certain. Stonk Ape doesn't really flow. It doesn't paint a pretty picture. Anyway, Diane, how you doing? M34, what's happening? AMZ, back again, huh? Shorty, that's a short Z. That's a weird name. Okay. Heaven Gen. Ooh, Heaven Gen. Okay. Rick, Stanley, how you doing? Isco. Weeble King. Weebles wobble, but they don't fall down. Buzz Dan, Stephanie, Charlie, what's going on? RLS, what's happening? Famous, that's an interesting way of spelling that. All right. 922 Duke, Harry, Bill, how you guys doing this evening? All right, so hold tight for a second. Long Ray, back again. What's happening? All right, M1. All righty. So, that all being said, two reasons, a known reason, unknown reason. The dividend stocks, I stick into the calendar to know when they're going to move. Once I know when they're going to move, that's when I can make my plan. Now, remember when I said simple, safe, predictable, and consistent? Well, that sounds great, doesn't it? Well, let's take a look. Now, we're actually going to take a look at a couple of trades tonight, and I'll actually walk you through a few of them, showing you what I'm looking for. Not by any means, shape, or form am I going to give you a tip or tell you what to do. No. I'm just showing you what I do. This is just my opinion. This is just for entertainment. However you want to look at it, I'm not going to give you advice. I'm not going to take that responsibility. If you want to talk to me, seriously, if you want to talk to me, pick up the phone, or better yet, send me your number and I will give you a call. You guys over here on YouTube, you actually have access to my phone number. You just got to dig for it. I'm not going to tell you where it is. If you really want to talk to me, you really want my opinion, you want to talk, chat, talk about investing, great, I'm here. Wonderful, let's do it. Send me your number, I'll give you a call. I say that every single night, and believe it or not, only one or two people will actually send their number. Now, there's 7 channels going right now, 7, and out of that, maybe between 10 to 25,000 people will come through this channel at night, every night. I'm here every single night except for Friday and Saturday night. But every single night I say, you want to talk? Fine. Give me a number. I'll give you a call. But out of 10 to 20,000 people that show up, only about 1 or 2 send me their number every day. Trouble mine. Garrick, Trump is insane. Cool. I'd love to have a chat with you on that one. See, I have a problem with that. The only reason I have a problem with it, let's take his name out for a second. Let's just call him Mr. President. Okay, so Mr. President says, hey, I want to make America great again. Explain to me in a manner in which that idea is bad, and then try to make me believe it. Okay, I'm 62. Well, I'm 61 going on 62. I've seen a lot in my days. Not as much as some, but think about what you're saying. Trump is insane. Why would you say that? You may not like what he does. You may not like him personally. But for him to say, let's make America great again, I don't see a problem with that. 2, stop sending money overseas. Ask the American public where they want their money to go. What's wrong with that? That kind of makes sense. Let's stop wasteful spending. What's wrong with that? Explain to me in a manner in which I'll understand the statement Trump is insane. Because what you're saying makes no sense to me. Okay? I'm a Gen Xer. We call it like it is. We say what it is. We have no concern whatsoever about your feelings. There's no safe spaces. And no, we are not going to give you a participation trophy. Terribly sorry. Your feelings are going to get hurt. And just go somewhere else. Simone is in the house. How you doing there, Simone? Doug just showed up. How you doing, Doug? Free ride. What's happening? Super Substatic. Cool name. American companies to invest in. Absolutely. That's it. Invest in American companies. That's all I do. If you have no problem being an American, buying American stuff, great, wonderful. This is your brothers, your sisters, your aunts, your uncles, your cousins, the guys down the street, the lady you know from church. They all work here in America for American companies. Why not invest in America? It just makes sense. Doug, thanks for that. Simone, what do I think about coals? Ooh, Simone, great. I had a couple of questions. Oh, spikes. Trump makes broad, bold statement with zero facts. Yeah. So? What's the big deal about that? That doesn't make him a bad person. Hey, boss, how you doing? Good to see you. Anthony, how are you doing today? Any American companies in perfect position to cash in on this new America? Oh, well, hold on a second. New Jersey 70, how you doing? Okay, so Super Substatic, let me ask you a question. Okay? Garrett, tariffs affect American companies more than other companies. It affects consumers along the line. Oh, boo freaking who. You have a problem with tariffs, stop buying shit from overseas, buy stuff from made in America. Okay? Plain and simple. You're not going to get my sympathy whatsoever. Okay? If we selling stuff over there and they tax us 10%, great. They send stuff over here, we tax them 10%. We send stuff over there, they tax us 50%. Great. They send stuff over here, we tax them 50%. Fair is fair. The left hand washes the right no matter what country you come from. Okay? Now, Garrick, also, you may not know this, but since the United States started back in the 1700s until the creature from Jekyll Island showed up, 1913, America's government ran 100% on tariffs. No taxes whatsoever. 100% on tariffs. Countries from all over the world want to sell products to us. Great. Let's buy it. But if they're going to tax our products, we should tax their products. Fair is fair. That's all he's asking for. Take a look at the whole conversation, not little tiny snippets. Little tiny snippets can paint the wrong picture. Okay, so let's get off of politics. That's not why we're here. We're here for investing in dividend stocks for weekly cash flow. Let's cut it out because you're not going to change my mind whatsoever. Terribly sorry. Okay? You have a problem with tariffs? Stop buying shit from overseas. Simple. If it says made in America, great, buy that. Okay? Support your brothers, your sisters, your aunts, your uncles, the guy down the street, even if you don't like the guy down the street. Okay? He's working here to make this country a better place to live. We all want the same things. We want happiness, security for our family and friends. And we want to have a good, happy, prosperous life, and we want to be left alone. Leave us alone. Give us what we want. Don't spend our money needlessly. Okay, let us know where our money's going. I'm all for an open book. I would love to see that little checkbook opened up. And then I would like to have some of those bureaucrats explain to me in a manner which I'll understand. Why are we sending money here? Why are we sending money here? Okay, we got Americans living on the street. We have people here that don't have enough to eat, that don't have health care. Why are we sending money overseas? Take care of your brothers and sisters first. Okay, I don't know anybody in Ukraine. Hell, I have a hard time, I know where it is, but I'd have a hard time finding it on a map. You can go on any street in the U.S., hey, where exactly is Ukraine? What is the capital of Ukraine? What are some of the smallest cities in Ukraine? Most people have no freaking clue, so why are we sending money there? All right, anyway, let's get off of politics. All right, Jersey, hello. Hello, Goodman, what's happening? Tariffs affect Americans, blah, blah, blah. Stop buying foreign shit. All right, where we going? Where we going? You're going. Uh-oh. All right, here we go. All right. Hey, Rizzo, what's happening? What do I think about Bud stock? Well, let's take a look at Bud. Oh, wait a second. We want to look at AT&T first. Sorry, dude. AT&T was first. Let's check this out. Here we go. Now, I'm going to say no to AT&T right off the bat. Not that I dislike it. I'm just saying not this week. Reason being, here's the high here, and it's pulled back. So, great. I want to wait. Let's zoom in. Last 30 days is right here. Okay, 30 days ago, we're at 25. We shoot up to 28. That's a $3 increase. So $3 from here to here. Now, you may not think that's a lot, but that's over 11%. That's 11% increase. Yeah, profit taking. Look at it right there. Profit taking. Now went back up again. Now profit taking again. Now we're down here at the 25.72 area. Yeah, I'm going to be looking for a bottom. Okay, that's not a bottom yet. Okay, we'll wait and see. I'm going to put AT&T down for next week. As soon as we find the bottom, then yeah, I'll jump in on it. Wow, we have a lot of stocks to look at next week. Holy cow, I like that. All right, so AT&T is going to be no. Bud, you say. This Bud's for you. When you say Budweiser, you said it. Oh, hell no. How's that for an answer? Hell no. Now, the reason being, look, here's your 30-day bottom here. She shoots up. The high was on Monday. Yeah, so Tuesday, profit taking. Wednesday, profit taking. Just kind of like sideways. Yeah, this baby's going to come down. Yeah, no, just wait it off. Wait it out, okay? I'm saying about 2 weeks, because this baby's going to come down, find a new bottom, then turn around, go back up. So not time. I don't buy at the high. It just doesn't make sense. Buy low, sell high. When have you ever, seriously, when have you ever heard anybody say, hey, it's at the high of the year. Let's buy some and wait for it to go higher. Yeah, no, it doesn't work that way. Buy low, sell high. Okay, we got one person over on Instagram. Wise Family Living. How you doing again? Nice to see ya. You got the whole channel to yourself tonight. Nobody else is on Instagram. Go figure. Who knows? All right, anyway. So no to Budweiser for this week. I'm going to write it down for 2 weeks from today. And we'll take a look at it again in 2 weeks. All right, so let's keep on going through some of the questions. Arizzo, I said hi to you. Supersonic, cool. Daisy 1000. Everything else he does makes him a complete bad person. Double jolly good. Daisy, let me ask you a simple question. When is the last time you got on a bus, a plane, a train, and then stopped and asked the pilot or the driver, say, hey, what do you stand on this? What do you stand on this? What are your ideas? No, you don't. You get on the bus, you get on the plane, you get on the train, you keep your mouth shut, you go back and you let the man do his job. He's going to screw it up. Great. He's got 4 years to screw it up. Good. Let him do it. Okay, Biden screwed it up for 4 years. Obama screwed it up for 8 years. Now it's Trump's turn to screw it up for 4 years. Leave the guy alone. Let him do his job. Do you know anything about WEEI? W-E-E-I. It has no options. Okay? No options means no. Now, when I say I want companies, 2 criteria and only 2. All right? 2. 1, consistency of profitability. 2, weekly options. There's no weekly options here whatsoever. Okay? But anyway, Daisy, I appreciate your interaction. I really do. I don't want to talk politics. There's 3 conversations you never have in public. 1, politics. 2, religion. 3, money. Well, we're here talking about money, but not really. We're talking about investing. It's only a very small portion of your life. Where your money comes from, yeah, maybe that's 1/10 or 1/8 of your life. Well, you have other issues to worry about. This here, 10 or 15 minutes a day, that's one less thing to worry about. Amen. Daniel, how you doing? David, thank you. OMG. Daisy, I'm terribly sorry. Okay, number 1, you're a female. I'm a male. We're never, ever, ever going to see eye to eye. Okay, you were born female. I was born male. Okay, we're going to look at things differently just because we're different genders. All right? I never, ever, ever once asked the pilot of an airplane, hey, what is your take on this? What is your take on that? It's none of my damn business what he thinks. Thanks, Jeff. Captain Skills, what's happening, Jarek? That ends up taxing 50% to the consumers then. Where's my 50% pay raise? Garrick, we can do this all day long. Obama was my all-time favorite president. Put 95% of competition out of business. Cool beans. Andrea, using that people don't do their homework or know anything about history. Yep, thank you, Andrea. You're right. People will bitch, moan, and complain, but they won't look at history. They won't look at the facts. They'll just blurt out stuff that you hear on TV, and it's usually not all right. Jarek, yeah, MB, maybe. Okay, maybe. Yeah, I get that one. I'm not up with the acronyms here. I'm going to get over here to YouTube in a second. Hold on. Super static. Mikey, amen. Mike, okay, thank you. Big life. No, how he speak affects the message. Okay, I'll let you take that one. TJX looks interesting. Let's take a look at TJX. TJX. Okay, TJX. I'm not quite sure what you mean by interesting. Now, don't get me wrong. I've done TJX before. Take a look closely. Now, I look for 5 things. Every time I look at a chart, I look for 5 things. Okay? 1, the high, the low. Where was it a year ago? Where is it now? And number 5, what's the direction? Up, down, up, down, up, down, up, down, up, down. Okay, right now it's in a downtrend. Great, we'll keep our eye on it, but I'm not going to trade it this week. I'll wait for the bottom to show up, turn around. But here's the thing. It goes up, it goes down. This is the time to buy. It goes up, it goes down. This is the time to buy. It goes up, time to sell. It goes down, time to buy. It goes up, time to sell. It goes down, time to buy. That's my philosophy. Everybody has a different way of looking at things. Okay? I'm here for cash flow. Weekly. There's a huge difference. Weekly cash flow. That's what I'm looking for. So it has to have weekly options and be consistently profitable. So TJX, although I like the company, look at the situation. All right? 30 days ago, we're here. Here's the high. And now she's dropping, looking for the bottom. Okay, the bottom sounds like a great idea. Buy low, sell high. So as soon as it pops up, yeah, I'll jump in if the numbers are right. All right, so let's keep on going. AMD, Advanced Micro Devices. Budstock, sir, what do you think? Okay, Apple user, we already looked at Bud a little while ago. What are your thoughts on CEG and DECK? Okay, Chase chair. We'll take a look at that one in a little bit. Hold tight, don't go anywhere. AMD, Advanced Micro Devices. Now, I'm not even going to look at the chart for AMD. We're going to go right here to Yahoo Finance. AMD, Advanced Micro Devices. Give it a second, let it pop up. There it is. And now I want to go right to here where it says historical data. Well, because historical data tells me how often has this company increased its dividends. Oh, wait a second. Hold on. Hold on a second. Do you see this right here? Forward dividend and yield. It has no dividend. The last dividend this company had was in 1995. So if they're not sharing their profits, that means I have to read each and every single quarterly report and every single annual report. You know what I say to that one? Yeah, no thanks. That's too much work for me. I like going and taking a look at the numbers. Is it increasing? It's easy to see. Okay, hold on a second. I'm going to show you something, and you tell me how easy this is to see. Dun, dun, dun. Now, I'm strictly a numbers person. 1 plus 1 is going to equal 2 no matter which galaxy you come from. All right, so we're here at historical data. Okay, first column gives you the dates. Every single date this stock has traded. Every single one. The opening of the day, the high of the day, the low of the day, the close of the day, the adjusted amount, and then the volume. All right, those are all the numbers I want to see. But I don't want to go through all these numbers. I only want to see the dividends, because the dividend is a portion of the profits the company gives back to the investors. So if the dividend consistently increases, well, that just kind of makes sense to me. Now, Microsoft, okay, MSFT has been paying dividends since 1986. So let's go all the way back 20 years to 2005. Now, I want you to pay attention closely. This is what a dividend should look like. 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Every single year it goes higher and higher and higher and higher. Now there's only about 300 companies that do that. Now we looked about 20 minutes ago, 9,976 different companies. But only about 300 are consistently profitable like that. Now, you guys can put your money wherever you want. I'm just showing you what I do and why I do it. Well, it doesn't make sense to me to put my money into a company that's not consistently profitable or doesn't have weekly options. I have no desire to sit in front of my computer all day looking for setups to make money here and there. Okay, I've passed the point where money is my main focus. My main focus now is spending time with my family, hanging out and doing what I want, watching the sunset, watching the sunrise, watching a chipmunk climb up a tree, grab a nut, come down, climb back. Yeah, I like the simple things in life. All right. Let's keep on looking at these questions. Exactly. Budstock, we looked at that. AMD, we looked at that one. Big Life. Nope, not true, D. I have no idea what that means. Okay, Mesh. How to get out of it. Mesh, I'm going to have to do a deep dive into coals and just give you a rough idea of why you don't want to do that. Well, why I'm not going to get out of my coals. Sit tight for a second, all right? Now, I'm going to go over to YouTube and see what kind of questions you guys have over here. Chase, how does this stuff work? Just sit back, relax. Always been curious. I'll be here until 11:30, so ask any questions you like. Becca Makawa, how you doing? That looks like a defeated man. Brandon, I don't know what you mean by that. Jacob's on the line. Yes, he is. Raphael, James, here again. And you are here again. Glad to see you're healthy and going strong at 90 years old. Yep, thank you. Not easy. P.S. I'm on the weed again. All right. Good for you. Morty Pro, how you doing? Raphael, you remind me of Michael Scott from Dunder Mifflin. Okay, never heard of that one. Do you like day trading? I don't do day trading, sorry. How can you find a company that is going to be profitable in just a weekly exportation options contract? Oh, Kayak, you were here before. I remember that name. Antoine, who is Warren Buffett. That's funny. How you doing? Christian, hello. Antoine. All right. What about Alcoa? Antoine, I'm going to write Alcoa down. We'll take a look at it. We'll take a look at it in a little bit. Scott McFarland, hi. Do you happen to know why March 21st and April 17th don't show up on weeklies on AT&T and Bud? March 21st, nope. April 17th, nope. And others, I feel like the premium suck on those dates. Okay. I'd have to take a deeper dive into that. If you want, send me a DM. We can chat about it. But right at the top of my head, I can't give you an answer that's going to help you out. Kerry, trust this man. He can see multiple charts at once. All right. A felon for president. What could go wrong? Okay. Free speech and other stuff. Okay. Kerry, nothing. Luigi, come on. Stay James. Ford. Okay. We're going to take a look at Ford also. Alrighty. So So free speech and more. You really want to have a conversation about that? I mean, seriously. You really want to have that conversation? Okay, you and I know, well, I know, but you probably won't admit the only reason the word felon comes on Donald Trump's name is because that's the way the powers that be wanted it. Doesn't mean it's true, okay? If you look for something, you will find it. If it's not there, you'll make shit up. That's exactly what the Democrats did. So don't get me started on it, because no matter what you say, I ain't going to believe you, so you're just wasting your breath. Long Ray, you need admins to boot out political comments. Yes, I do. Okay, Long Ray. Now, I do give people permission to be admins, but now you've been here for a while. I appreciate it, really do. But I need you to be here just a little bit longer and add a little bit more content and know exactly where you're coming from before I give you permission to be an admin. No problem with that. Super substatic, because American corporations got greedy and farmed it all out overseas. You can't blame it on American corporations. You blame it on the Americans, me and you. Okay, you're here to see how to make money from the stock market. Where do you think that money goes? It goes back. All right, never mind. Nope. Don't suck me into that politics again. All right, well, let's keep on going. Okay, so Mahesh, you want to know about Kohl's. I did a deep dive on Kohl's this morning. I don't know if you weren't there this morning on the morning trading group, but I did a deep dive on Kohl's. Now, let's take a quick look at it and I'll give you my opinion. All right, so I'm going to put Kohl's right here. All right, now I want to go to statistics. Okay, so Kohl's is at $8.61. Did you see that? $8.61 for Kohl's. Now, let's take a look at the statistics. Okay, here's the current market cap. Okay, that's what is that? First quarter last year, second quarter last year, third quarter last year, fourth quarter last year. Okay, those are the numbers. Okay, here's the current first quarter so far this year. Pay attention to these numbers down here. All right. Okay, here's the book value for Kohl's, $34 a share. Okay, the current price, $8.65. The book value is four times the stock price. Book value is $34. There was one number I wanted you to take a look. Total cash per share. No. That's not what I'm looking for. What am I looking for? Balance sheet. Where's the profits? Profits per share. Profits. There you go. Right here. Mahesh, you see this right here? Revenue per share. Revenue. That's how much money they have coming in as opposed to each share that they have. $146 per share revenue coming in. That's revenue coming in. $146 per share. Okay, that's a nice revenue. Now, for the fun of it, let's go take a look at one of those stocks that people just seem to be loving nowadays. NVDA. NVIDIA. Okay? Let's try this one more time. NVDA. Okay, same thing. Okay? NVIDIA. Revenue per share, $5.31. $5.31 revenue per share. That's how much money the company has coming in. The stock price is $116 per share. Okay? But they have $5.31 per share revenue coming in. But hold on, it gets worse. Okay? Book value per share, $3.24 per share. Okay, the stock price is $116. The book value per share is $3.24. How can you possibly tell me NVIDIA is good and Kohl's is bad? But hold on a second. It actually gets worse. It really does. So let's go to historical data. Okay, historical data. Okay, historical prices, dividends only. Okay, 1 penny, 100 and whatever it was, 100 and how much is it? Okay, $116 a share, and it's paying out 1 penny dividend. How can you possibly tell me Nvidia is good and Kohl's is bad? Kohl's has a dividend of KSS 50 cents a share. The stock is $8.65 a share. The dividend is 50 cents a share. Nvidia is $116 a share, and its dividend is 1 penny. Take a look at the numbers. Don't look at the stock price. Stock price doesn't mean shit. Stock price is the public's perception of the value. Well, Kohl's is having a little bit of an issue because the previous administration did not want to prosecute theft under $900. So that's the issue for some of these small companies. All right, anyway, let's get off of that. So, Mahesh, I hope you understand that. Now, I have Kohl's just like you do. I have no intention of getting rid of my Kohl's. As a matter of fact, let's go here. Put in Kohl's. KSS. Okay, now. Okay, now I have Kohl's at 1572. Now 1572 is way up here. Whoops, not even on this chart. Okay, here's the price right now, but I own it at 15, which is way up here. I still have no desire whatsoever to get rid of it because even though the stock is down here, okay, I will sell options at 11 or 12 because it's like 4 strikes out of the money. And the 11 is going for 0.5%. Okay, so 0.5% per week still comes to 26% per year. I'm okay with that. And they pay a 50-cent dividend. So I have no intention to get rid of my Kohl's. It's the numbers. Pay attention to the numbers, not just the news. Because the news, the talking heads on TV don't have your best interest in mind. They don't. Now, I'm not telling you what to do. I'm just looking at the numbers. Okay, you need... yeah, Long Ray Wade talked about that because American corporations are greedy. No, it wasn't. Well, yeah, it is. American corporations are greedy because they're shareholders. And who's that? That's us. We're the shareholders. Okay, let's go back to... Boy, uh-oh. Oh, we haven't done that yet. Oh, he's back. Oh, he's back. How far do I go? All right, there we go. All right, caught back up. Exactly 100% correct. Thank you. Okay, we just looked at Kohl's. K Dude Post. Hi, how you doing? Okay, Apple user. We already looked at Budweiser. Now, please do me a favor. There's a lot of you guys here. I will read each and every individual question before the night is over. Please only ask the question once. Make sure the company has weekly options and dividends. We'll do just fine. Altikas, you're absolutely 100% right. Tariffs are paid by the consumer. The price is going to be pushed onto us anyway. How do you set up the calendar? Flash, how are you doing? Well, the calendar is already there. It's already on Thinkorswim. If you come to Monitor, Trade, Analyze, Scan, Market Watch, okay, Market Watch, right underneath the Market Watch is quotes, alerts, visualize, financing rates, and calendar. If you're asking how to put all these little numbers in here, well, this right here, this little dot, you click on that, and you have all of this down here to look at. Whole bunch of stuff. Okay, here I can look at companies that have 25 years of dividends. Well, there they are. All the companies, 25 years of dividends. Right up there. Okay, Gunny, we just looked at WEEI, Dividend Stock Talk on Cool Beans. RLS, Macy's. Oh, I like Macy's. It was one of my favorites last year. Macy's. Okay, so let's take a quick look at Macy's. Need the glasses for that one. Okay, so Macy's. Now, I always do I approach every single stock the exact same. 1 year chart, numbers, 90-day chart, 30-day chart, seasonality, and see if it's the right fit. Not all of them fit. I mean, okay, the high of the year, 22. The low of the year, 12. That's almost a 50% drop. Okay, if you're going to buy a stock, know what the high is of the year, know what the low is of the year, and just keep in mind, stocks can drop up to 50 to 60% per year. So if you're buying it at 22, yeah, get ready. It thing can drop to 11. Oh, in this case, it dropped to 12. Pretty close. So here's the high, here's the low, here's where it was, here's where, look at the movement. Down, sideways, down, sideways, down. Here we are right here, 14.10. So if I buy it at 14, I can sell someone the rights to buy it from me anywhere between 7 and 31. So that's more than 1%, 7 to 31. Big spread. Okay? But do I like it? Yes, I do. Is it the right time to buy? Well, let's take a look. Let's move this out of the way. Okay, a year ago, we were at 20.60. The high of the year was 22.12. Okay, the last 90 days, the last 3 months, same thing. The high, the low, where was it, where is it? Now, on the 90-day chart, I'm looking for recognizable patterns. Well, there it is right there. Okay, up, down, up, down, up, down, up. Okay, it's actually that easy to see. Now, that just shows me what the pattern is and the time frame. Look, a 1 month, 2 months, 3 months, 4 months. So it's basically the same thing. Okay, last 30 days. Today's the 12th, so we'll look at the 13th right there. Here's our last 30 days. Look, up, down, up. That's pretty easy to see, right? But the question comes down is, do you like Macy's? Do you like Macy's at this price? Well, let's actually do, remember I told you we're going to do a sample trade? Well, let's do one on Macy's. Well, I own some Macy's, and I just so happen to like Macy's. So let's take a look. Okay, let's get this thing over this way. All right, let's get rid of this. All right, now I'm going to change. This is Think or Swim. It's offered for free from Charles Schwab. It is a trading platform. Now, you can download this and use it for free. They actually have a paper trading option, which means it's kind of like Monopoly. You can play, and it's kind of like for fun, just to give you an idea how everything works. The numbers are real, but it's not real cash. It's just simulations to give you an idea how it works. All right, so it's currently at 14.10. I'm going to change it here from single to a covered call, because remember I said I want simple, safe, and predictable. Well, simple, the simplest strategy is buying and selling. That's the simplest. But the thing is, buying a stock, you don't have a profit until you sell something. So now you have to sit and wait for it to go up or for it to go down. But a covered call, you can buy the stock and sell the rights at the same time and create cash flow. That's what I'm doing. So $14, the $14 strike price is selling between 7 and 31. Let's actually see what it looks like. Okay, change it to a covered call, and the 14 right there. Okay, just one contract right there at the market. Now, the reason why I want market as opposed to limit, you get to decide what you want to pay, what you want to sell. But market order, it's give it to me now. Now, the covered call order, when you're entering into a trade, the covered call, that means buying the stock, and the option are tied together, so I already know exactly what my profit's going to be. $27, it's cost me $1,300. Well, I can't do that in my head. Let's get the calculator. Calculator right there. Okay. Bring it over to there, and here we go. Okay, to calculate your profit, your rate of return, you take the maximum profit right here, $27. $27. And then I want to divide it by how much is the trade going to cost me. Cost of trade, including commissions and fees, right there, $1,373. Okay, so divided by 1,373. That gives me a 1.9% for 1 week. Well, what is 1.9% every single week? What does that come to a year? Because a lot of you people still going by the year. Okay, so 1.9 is almost 2%. That's 102%. Okay, 102% for the year at 1.9% every single week. Well, my average is 1.2% every week. Now, do I make that every single week? No. Sometimes I make 1 or 2. Sometimes I make 3 or 4. Sometimes I make 0.5%. But it all averages out to about 1.2% per year. Now, all my trades are available online for you to take a look at, just in case you're wondering. But let's keep on going. So, yeah. Now, let's read it so you hear what it sounds like. Okay, buy one covered call, M, Macy's, 100. That is the weeklies. 21 March 25. That is next Friday. Now, the reason why we're not doing this Friday, because there's only 2 days left. How much time value do you think you're going to get for 2 days? You get more for 5 days. That's why I do it on Monday. Monday, I get the full 5 days of time value. But Monday's gone, Tuesday's gone, and Wednesday's gone. You just lost 60%. Yeah, it's not worth doing it this week. So next week, yeah, 1.9%. Buy one covered call, Macy's 100s, 21 March 25. That's next Friday. The $14 call strike against the Macy's stock at the market to open. That's the order. Okay? Here's my break even, $13.73. Well, the stock is currently at, what is it? $14.10. All right? Here's my maximum profit. This is what it's costing me. And this is what it's actually costing me if I do it on margin. All right, so let's keep on keeping on. Okay, K-Doot Post. K-Doot Post? Cube. Now, I don't think Cube has been around. Let's get rid of this one. Let's go back to the beginning, right there and right there. Now, you want to take a look at Cube. I don't think I've ever traded Cube before. K-U-C-U-P. Yeah, no. Okay, now, K-Doot Post. Remember when I said I'm looking for consistency of profitability and weekly options? This is monthly options. The numbers just don't work. I can sit here and explain to you how they don't work, but I do it every single night explaining why monthlies don't work. There's only 12 months, which means I'm making one trade per month, making 12 to 24% per year. No. I'm retired. I can afford 5 to 10 minutes a day, every day, to get 1% a week. That's 50% or more per year. Okay, that's the way I prefer to do it. Okay, Rizzo wants to take a look at Ford. Here we go. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the motion. Up, down, sideways, down. Now we're at 964. The 980. This is a weird one. Okay, 885, 985. So the 985s are going for 13. Now, I'm not sure if you know that 985 is a stock price. Well, 13 cents is more than 1% of 985. All right. It's like 1.5%. Okay, so I like Ford. So let's take a look at the numbers. A year ago, Ford's at 1206. The high of the year, 1490. The bottom of the year, the last 90 days, look at the same thing. The high, the low, where was it? Where is it? Look at the motion. Down, up, down, up. Now she's coming back down again. Not an ideal to jump into Ford. Look at the last 30 days. Okay, here's your last 30 days. Look, shoots up, pulls back, shoots up, pulls back. Yep, it's coming down now. Not a time for me to jump in. You want now? See, I got it a couple of days ago. Okay, actually, I got it a couple of weeks ago. So mine ran up. Now she's coming back down again. All right, so let's keep on keeping on. Sorry, Rizzo. Where's the bottom? 15 to 17. Hey, super substatic. I have no idea which bottom you're talking about. Andrea. Andrea, you want to look at 3 of them? Apache, Alcoa, and Intel, huh? Give me a second. Let's go back over to YouTube. Let's see what we have over here. Don't. All right, Antoine. What happens to a covered call that drops low and you're covered and at a high price? Do you have to sell it cheap when it reaches a lower strike price? Now, Antoine, we just went over that a couple of seconds ago. Okay, now we were talking about Kohl's. Kohl's, I was in it at 16. It's currently at 8 or something to that effect. yeah, I will sell something a little bit less than what I paid for it, but higher than what the current price is to have some money coming in. It may not be a full 1%, but can offset by other companies giving me 2 or 3%. It's all a numbers game. Okay? Don't put all your eggs in one basket. I'm sure you've heard that before. If you're making money on one and not making as much on the other, one offsets the other. You got that, Antoine? Alrighty, so let's keep on going. Okay, Gunny, we already looked at WEEI. P-Bach, I don't know. Do you prefer to sell put spreads to get paid to wait, or do you just get in? Now, you're talking about doing hold on, give me a second. A covered put strategy. I do those every once in a while, but I don't teach it here. Okay, I teach one trading strategy here and only one. You gotta look at it this way. Okay, I've been doing this for 20 years. I know a whole shitload. I do. I would lose a lot of people in the conversation because this is supposed to be a simple, safe, predictable strategy. And if you do it right, you can make 1% a week. That's over 50% per year. That is a good starting point. I consider this as a starting point. Great. Jump in, get your feet wet, make your 50% a year. When you're ready to move on to an additional strategy, yeah, let me know. We'll work something out. But at the moment, only one strategy here. How does S&P 500 has dividends? S&P 500 doesn't have dividends, but the SPY does, which is the spiders. And I don't do the spiders. If you take a look at the numbers on the spiders, SPY, seriously, if you're thinking about SPY, check out the numbers first. The numbers make no sense whatsoever. I would not ever do SPY. All right, Andrea, here we go. APA, Apache. Ooh, did you see what I just saw? Okay, high, low, was, is. Look at the direction. Up, down, up, down, up, down, up. Look at this right here. That's the bottom of the year right there. Now it's moving up. You cannot get any lower than the bottom of the year. She was at 36. Now she's at 18. That is a 50% drop. The high, 36. The low, 18. 50% drop. Do you think it can go lower? It could. Is it going to? This is where you need a good, financial website. Throw it in Apache. APA. Okay, 25-cent dividend. Let's look at how often does this thing increase. 25, 13, 3, 25. Okay, not the greatest in the world. I've seen worse. Okay, but Andrea likes it, so we'll take a look at it. All right, back to here. Okay, so APA. A year ago, wait a second. Before we look at the chart, let's take a look at the numbers. 1965, so the 20s are going for 42. That's 2%. I like 2% a week. Do you realize that 2% every single week is over 100% per year? So ask yourself a question. Let's say hypothetically you got $50,000 in your trading account. Maybe you got 20, maybe you got 15. Whatever you have in your account, okay? If you get 2% every single week, that's doubling your money every single year at 2%. Okay? Read the numbers. Numbers don't lie, people do. 1 plus 1 is going to equal 2 no matter which galaxy you come from. Peace be with you, live long and prosper, all that bullshit. Anyway, the high, the low, you can't argue with numbers. Hell! What does S&P 500 ETF? Is it the same as a non-ETF for dividends? Nope. It is an ETF. And I don't do ETFs. Something about giving my money to a computer does not thrill me. Think about it. ETF. Electronically Traded Fund. Now, don't give me the BS, but exchange traded fund. Yeah, you go to the exchange. They're all computerized. You're giving your money to a freaking computer. Haven't you seen 2001 Space Odyssey? Or how about the Terminator? Not the Terminator. What is that one? Yeah, with Arnold Schwarzenegger. Anyway, so here we go. Apache, a year ago, 31.28. Top of the year is at 36.05. She keeps dropping and dropping the last 90 days, the last 3 months. Okay? The high, the low, where is it? Look at the pattern. Up, down, up, down, up, down, up. Where's it going? It's going up. Look at the high way up here. It has all this room to go before it challenges that 90-day high. But let's look at the 30 days. 30 days, right there. 30 days. Look, up, there's the high. You get to a high, then you're going to have profit taken. What happens? It drops, finds a new bottom here, then she shoots up. So it went from 17 to 19. That's only $2. That's about a little bit over 10%. But it has a lot more room to go. So yeah, I like that. However, what does a Patchley normally do every single year this time? And for that, let me briefly explain to you this chart here. This is what's called a seasonality chart. Now, you can set this however you want. I have it set at 10 years. Let me briefly explain. All the way to the right is January 1st. All the way to the left is January 1st. All the way to the right is December 31st. The blue line here represents the movement this year. Okay, January 1st, she went up, she went down, she went up, she went down, blah, blah, blah. This red line here represents 10 years of data, which is 2015, 2016, 2017, 18, 19, 20, so on and so forth for the last 10 years. This is the average movement. Average movement. That's what it already did. What does it normally do? Well, look, it goes up the first part of the year. It drops at the end of the first quarter. Okay? Second quarter, she shoots up. Third quarter, she goes back down again. Fourth quarter, she goes up, and then she goes sideways. Okay, great. Well, if this is what it normally does, why not set up our trading in a manner to take advantage of this? Look at where we are right now. Okay, right there. Look at that. It's getting ready to go up. Well, that's what I want to take advantage of. Put right there on the blue dot because that's today. All right, so here's today right here. Okay, here's today right here. Hypothetically speaking, if it does the same thing this year as it did last year, the year before, the year before, the year before, down, and then she goes up. Okay, does this sound like something you want to jump in this week, or do you want to wait a little bit? But here's the thing. This already happened. Let's see what's happening right now. Because what's happening right now, some of you may not like this, but what's happening now trumps what it did in the past. Basically, the trend. You cannot fight the trend. The high, the low, now she's going up. So she's making the move early. It's the same move, it's just early, and it's going to the upside. So let's do a practice one on this. Okay, it's at 19. All right. The last trade right there, 1965. So let's do a 20, and let's see what it looks like and see what it sounds like. First thing we do, change it from single to covered call. Now, for those you don't know, the screen behind me is live on YouTube. Everything you're seeing here is being recorded, so you can go back and watch it again. So let me give you a little bit of a factual information. You ready? Here it comes. It is precisely 10:26 p.m. Eastern Standard Time, the 12th day of March 2025. This is not recorded. However, it is being it's not pre-recorded. It's being we are recording right now, so you can watch it later if you have any questions. If I say something that you find interesting. Okay, so let's keep going. All right, so I like it at 20. So let's do it at 20. Okay, the 20 is right here. 1983. Okay, just one contract. Now, the reason why I'm doing just one contract, some people freak out when they see the numbers of 10, 20, 30 contracts. Okay, so one contract, here it is. Buy one covered call Apache, APA, 100s, that's the weekly, 21 March 25. That's next Friday. That means when I sell somebody the rights to buy it from me, from the time they pay me until 3:59 p.m. March 21st, they have that much time to make up their mind. If they do not make up their mind at that time, that option goes to zero. I keep all that money, and then I sell it to someone else the next week. predictability and consistency. I know what I'm making before I even do the trade. Okay, that's the predictability. I know exactly what I'm making before I even do it. Consistency, weekly options. I can do this every single week. All right, so profit here, $80. What's it costing me? $1,900. Let's get the calculator. Calculator, where are you? Okay, clear this. $80 maximum profit right there. See it? Maximum profit, $80. What is it costing me for one contract? That's buying 100 shares, selling one contract. Okay, it is a legal binding contract. Okay, a legal binding contract requires 4 things: beginning date, ending date, consideration, that's the money, and meeting of the minds, means an agreement mutually agreed upon. Buying a stock, buying 100 shares of Apache at $20 anytime between now and the 4 p.m. on the 21st of March. That is the agreement. The price and the date. Okay? 4 things: beginning date, ending date, consideration, that's the money, the $80, and then the meeting of the minds, buying the stock from me at the price by the date. That's it. Okay, that's the contract. That's why they call them option contracts. All right, so $80 is the profit. What is it costing me? $19.20. Divide that by 19.20, and it comes to a grand total of, holy shit, 4.1%. I like that one. 4% for 1 week? Oh, hell yeah. Because the numbers all looked good. Okay, the 1 year chart was okay. Not perfect, but okay. We saw the 50% drop from the high of the year to the bottom of the year. Well, great. It already took the 50% drop. I don't think it's going to go any, I don't think it's going to go any lower. It could. But here's the thing. 4 questions. Ready? Number 1, does it make sense? Number 2, do I like Apache? Number 3, do I like Apache at this price? Number 4, am I willing to buy it and hold it until the day I die, or it hits my target? What's my target? My target is $20. Well, what is it right now? Well, right now, it's at, between 1965 was the last traded price. The bid, 1894, the ask, 2025. So in the morning, let's get rid of this. Back to here. Okay, in the morning when the market opens, all of these numbers are going to change. But what doesn't change is the mathematical equation. The mathematical equation is, what am I buying it for? What's the closest strike price? What am I selling it for? That's it. That's the equation. Now, is it more than 1%? If it is, how much more than 1%? Susie, how are you doing, honey? Hope you're doing good, hon. Nice to see you. All right. So that being said, does it make sense? Do you like the company? Is it something worth getting into? Now, we got a couple stocks over here on Instagram. I'm going to take a look at that in a minute. I haven't forgot about you. Okay? I'm still going to take a look at those. So that's Apache. I'm going to write Apache down. Oh, wait a minute. It's already written down. All right. I already wrote it down, apparently. Okay, so the next one. Andrea. Alcoa, AA. All right, let's get this back over to here. Alcoa. And let's go back over to here so we can get a better view of it. All right, here we go. You ready? The high of the low. Where was it? Where is it? Look at the motion. Up, down, up, down. Look at it right here. Nice. That's a nice... Andrea, you did good picking out these. So this looks okay. The chart looks okay. Now let's take a look at the numbers. Do the numbers make sense? 33.25. Okay, so the 33.50 is going for $1.08. Now, you can do some quick math, right? $1.08 on a $33 stock is 3%. Well, that works for me. Let's take a look. A year ago, we're at $30. The bottom of the year was the beginning of August at 2707. Well, look where the high is. The high is right there, 1125. That was the end of November at 47. All right, the last 90 days. Here's your last 90 days. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Number 5, the movement. You ready? Take one little finger. Down, up, down, up, down, up. Okay, that's the overall simplicity of it. Don't make it more complicated than it needs to be. It doesn't need to be complicated. Okay, now you guys are all adults here. This was created for my 9-year-old daughter. Now, I haven't done this for a while, so let's go check it out. Just to give you an idea of who the little princess is. Okay, all right. There. Okay, this is all my social media. There it is right there. Go to YouTube right there. Okay, the YouTube channel is The 10-Minute Trader. See? The 10-Minute Trader. Got 900 videos. Yeah, have fun watching all those. All right, videos. The oldest video. And here's the princess right here. Amy, you ready to see this? Susie? Watch this, Susie.
Hi, I'm Gracie, and me as you being part of my internet website called Thingy, which my dad didn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you get the best return on your money.
That's me 15 years ago.
What does that mean? That means every single day you buy a different stock. Every single day there's a different company paying out dividends.
I laugh every time I see that. I think it's funny. But see, here's the thing. See, the thing is, 15 years ago, my daughter was 11. You know, she was 9 at the time, 9, 10, 11. The video you just saw, she was 11. Okay, so I showed her when she was 9. So to make it fun and exciting, we do a lot of fun, funny, weird stuff. Okay, to make it exciting for her, because she's 9 years old. Well, she's 11 here. But what you're seeing behind me is a calendar, an EX dividend calendar, which they didn't have 15 years ago. So I had to make one on a whiteboard, and I had to do it by hand. And yeah, you can see all the numbers in the background. I had to do all those calculations by hand years ago. Nowadays, you just point and click. The information's all right there. It's so much easier nowadays. But I'm saying the exact same things year after year. As a matter of fact, let's go here. Let's get out of this. Let's get out of that. Okay, no, this is my splash page. These are all the trades that I've done last year. You can see them, the profit and losses. They're right there. Okay, profit and loss right there, $96,000 on a $120,000 stock. What was that? 73% last year on that one account. Okay, all the way down here to the bottom. Let's go all the way down. These are all my trades from last year. But here's the thing. Look at this. August 31st, 2011. That is the first time I actually posted the trades that I do online. And you can read them. Okay, July 6, 2013. Let's keep on. All right, here, look at this. Here's a video I did March 23rd, 2013. Look, the 1-year chart, the 90-day chart, the 30-day chart. And here's the comment I had. Moving sideways all year, last 90 days, look at the channel close to the year high. Last 30 days, still that channel looking to dividend to make the push to the upside. Right there. 1 year, 90 day, 30. The exact same thing I did 15 years ago. It hasn't changed. It's not as if something new and interesting is popping up. No, the stock market's been around for 400 years. The first dividend stock was sold in 1602. So what is it that you're looking for? Me? I've already told you what I'm looking for. Consistency of profitability. If the company is run right, by the right people, and they're consistently profitable, that's where I want to put my money. You guys figure out where you want to put your money. I don't tell people what to invest in. I just show you what I'm doing. You want me to take a look? Great. I looked at Apache. I looked at Alcoa. Next, we're going to look at Intel. Now, I don't have Apache and I don't have Alcoa, but I do have Intel. We're going to look at that next. Yep, Chaser, we're going to look at that in a little bit. I haven't forgotten about you. Hal. What are the programs and websites and broker you use, if you don't mind telling? Okay, the broker that I use is Charles Schwab. The platform that I don't use Charles Schwab's platform. To me, it's a little confusing. It doesn't allow me to look at everything at the same time. But Think or Swim, which is owned by Charles Schwab, does allow me to look at everything I want to see in order for me to make a good decision for me. Okay? What is Kramer's gay brother up to? You know what they say? Mr. Gickswork. Okay, Mr. Gickswork. You know what they say? If you don't have enough haters in your life, you're not doing a good job. So I got one new hater. Thank you. Anyway, so let's get out of here. And let's get back to what we're looking at. All right, so Alcoa. Yeah, I like the numbers. Look at what it's doing. The 90-day high, 90-day bottom. Now she's going to the upside. You cannot argue with that. You can't. You can if you want to, but you're wasting your breath. Here's the high. Here's the low. Here's where it was. Here's where it is. Down. Now it's going up. It's actually that simple. Remember, the trading strategy I'm teaching was created for a 9-year-old. 9 years old. You guys are all over the age of 18. This should be, oh, that makes sense. I get it. Never buy something you don't want to own. Never sell at a loss. Make sure the company's consistently profitable. Weekly options only, and then make sure the numbers work. If I'm buying it for 33 and I'm selling it to someone else at 33, I'm making 118. That's more than 3%. 3% a week, that's 150% per year or more. How can you say no to that? Now, I'm not telling you what to buy. I'm just showing you how I do it. It either makes sense or it doesn't. It's actually that simple. It makes sense or it doesn't. Do it yourself or give it to someone else. It's that simple. Okay? There's nobody's coming to your rescue. Okay? I've waited for years. Not a single person has ever knocked on my door and say, hey, James, we're going to give you a quick checkup on see how well you did in high school and what you remember. What are the conjunctions? What is a proper sentence structure? Nobody ever came to ask me these questions. So why the hell did we learn all that crap? Anyway, let's keep on moving forward. So the last 30 days. Here we go, right here. 13, last 30 days. Here we go. 30-day high. 30-day bottom, she goes up, back down, now she's going back up again. It just makes sense for me. All right, so I'm going to write that one down, and I'm going to circle that one. Thank you, Andre. We're going to take a look at Intel next. Next, Intel, INTC. And here we go. Now, I do have, let me get out of there. I do have some Intel. All right, so here's Intel. Here's the high of the year. Here's the low of the year. Here's where it was. Here's where it is. Look at the movement. Down, sideways. Up, down, sideways. Now we're at 2068. The last trade was 2068. So the 21 is going for 69. Okay, cool. It has after hours trading, so the numbers are a little off. So I really can't give you a good accurate amount because when the market opens tomorrow morning, all these numbers are going to change. Now the numbers up here are after hours numbers. They don't correlate with these. Because this is closed. The options trading is closed after hours. Only the stock is. So whatever's happening after hours, we'll have to deal with it in the morning. But the math is still the same. The equation is still the same. Okay? This is what I buy it for. This is the contract I sell to someone to buy it from me for the same price I just paid for it. And then they're going to pay me this premium. It's an insurance payment. So yeah, if it's more than 1%, it makes sense to me. All right, so let's keep on going. Andrea, thanks. Those are all pretty good. The last 30 days. Wait. 90 days. Here we go. Nice. The high, the low, all that stuff. Down, sideways, up, down. Now it's going back up again. The last 30 days. Okay, can't really miss that up. Up, down, up. Really that simple. Adults have a tendency to make it more complicated than it needs to be. You either like the company or you don't. That's it. Buy it, hold it. Does it make your target? Are you okay with it? Buy and hold stock tips. Buy and hold stock tips. Let's take a look at Google, G-O-O-G. I'm going to say no right here, right off the bat. Reason being, G-O-O-G. Okay, the numbers look interesting, but all right, we don't need that anymore. G-O-O-G. Okay, 20-cent dividend. Interesting. Okay, let's go back. That's it. Okay, so Google, G-O-O-G, has paid 4 dividends. That's it. Since 2004 to 2025, it paid 4 dividends. I'm going to say no, because 1 year does not constitute consistent profitability for me. Okay, I like 20 years, 2 decades. Okay, now we saw earlier today, 9,976 companies. Why would I choose this one if it only has 1 year of dividends? It's not what I'm looking for. I'm looking for consistency of profitability. This is only 1 year. No. Okay, so let's keep on keeping on. PBOC, do you prefer to sell put spreads? Wait, yeah, okay. We just looked at Intel. Cube, we already looked at. Throw, please. You mean T-Row. T-Row price. Let's take a look at T-Row price. TRW. T-Row, no. 2 reasons. Reason number 1, it's a monthly option, okay? 21 March, 17 April, 16 May, 20 June, 18 July. Yeah, that's monthly. No. Reason number 2, it's at the bottom of the year. Yeah, no thank you. There's a huge difference between weeklies and monthlies. Let me explain briefly. Okay, 21 March, 17 April, 16 May, 20 June. I can only do that once a month. That's only 12 times a year. Think about it. If you're going to do an option, you get 1 or 2% for each option you do. Okay, the way that I do it. Because I like safety. I'm more interested in safety and predictability and consistency of profitability. Those are my concerns. Okay? If I can only trade it once a month, I'm making 12 to 24% per year. Now, you may think that's good. And it's actually not that bad if you think about it. But if I do it once a week, 1 to 2% once a week, that's 50% to 100% per year. I'm not really sure how it processes in anyone else's mind thinking that 12% is better than 50%. I don't understand that. Because when all things are equal, safety, predictability of consistency of profitability, and 50% as opposed to 12, explain to me why 12% is better than 50%. I'm at a loss. Really, I am. Okay, so we're going to look at Chaser. Okay. CEG. He wants to take a look at CEG. CEG. KEG. Constellation Energy Group. Interesting. Okay. I like the chart. Well, okay, hold on. Hey, here's the high. Here's the low. Here's where it was. Here's where it is. Look, up, down, up, down, up, down. Now she's going back up again. 215 to $10 increments. It makes it a little bit tougher. Okay. So the last price was 215. So the 220 is going for $6. That's 3%. Hold on. Does this company have dividends? Because 3%. CEG. Constellation Energy. All right, see, I got a little bit of a problem with this company. 2022 was the first dividend. So what does it make it? 2 years old, 3 years old? Terribly sorry, dude. Not old enough for me. Okay. DECK. DECK. All right, sorry, dude. DECK has no dividends at all. Okay, so that's no to both those. Terribly sorry. I like companies that have some age to them. All right, I have no desire to do companies under 20 years old. Well, once in a while I will, depending on who it is. But CEG is only 3 years old. Okay, DEC has no dividends at all. Yes, I know Bud is Belgian, but it is traded here in the United States. Gavin wants to take a look at SoFi. Okay, so let's go here to SoFi. SOFI. Gavin, I'm going to take a look at this, and then you're going to explain to me why am I looking at it. Okay? Why am I looking at... Now, the name of the show is Dividend Stock Talk. There are no dividends in the selected time frame for SoFi. So why am I looking at a stock that has no dividends if this is a dividend investing channel? It's an interesting question. Captain Skills. I am very interested in investing into a stock. I would appreciate it if you can give me some advice, please. My advice is send me your phone number. I'll give you a call. We'll have a nice conversation. Mahesh, I realize that Kohl's is almost 40% down. How to handle it. Okay, well, let's go back to Kohl's for a second. Now, Mesh, we've had this conversation many times before. I can't tell you what to do. Okay, you have what do you call it? A risk parameter, a risk factor that is yours. We all do. We have our own risk profiles. Like, what do we feel is risky enough for us to do, and what do we think is too risky for us to do? All right. Now, you've been following along. All right, and yeah, it is down almost 40%. Okay, the beginning of the year, okay, last March 28th, the price was $29.66. $29.66. 50% would be somewhere around $14.15. That's 50%. This thing has dropped all the way down to $8 from $30. That's a big ass drop. Very, very uncomfortable. Okay? Now, we looked at the numbers. We looked at what the revenue is per share. We looked at what the book value is. We looked at the revenue. We looked at a lot of interesting things on Kohl's. Now, yeah, Kohl's is one of those companies that have a big issue with theft last year. The bottom line was greatly affected. Now, the new administration's only been in for a little over 2 months. They really can't change what's going on in just one quarter. They got to need a little bit of time. So the question should be, are you okay with holding on to Kohl's? Are you consistently bringing in some money? Now remember, most people before they came here would buy a stock and hold it for decades, okay, for years. Now, you have the opportunity to trade on a weekly basis. So go back and look at, hold on a second. Give it a second. Okay. Now, if you would, Mesh, go into your computer, put in 365 days back, okay, a whole year, and put in Kohl's. How often have you bought and sold Kohl's? Here's my Kohl's right here. This is 1 year worth of buying and selling Kohl's. Okay? $1.46, $1.46, 30 cents, 15 cents, 37 cents, $1.29, $1.26, $1.48, 23, $1.40, $1.38, 38, 30, 30, 53, 33, 14, 4, 15, 20, 20, 20, 20, 18, 17, 14, 13. Okay, this is all year long. Every single week, I would take it and I would roll it forward. Okay, always bringing in some money against this position. I have no intention in selling. I saw what the numbers look like. So yeah, I'm into it, whatever I'm into it, but look at what I got here. Okay, I got 14 cents this week. I got 5 cents that week. 13 cents, 17 cents, 40 cents, 50 cents, $1.03, 16 cents, 37 cents. Okay? Every single week I will bring in something. Me personally, I don't know about you, I personally refuse to take a loss this year. This year, 0 losses. I think I had like 3 or 4 losses last year. But this year, 0 so far. I have no intention in selling it. Yeah, you may not get your 1% every single week. But if you add it up every single week, 52 weeks, how much is it then? If I sat here and added these all up, I probably have a halfway decent return. I have no intention on selling at a loss. Now, you've been here for quite a while. You've been here for almost a year. So you've actually bought it and it has gone down. But I don't know what you're selling it for, and I don't know what your risk factors are, what your risk parameters, what's too risky for you. Right now, I'm into it at 16. Okay? 16 is not even on the scale. Hold on a second. I'm laughing. It's not really that funny, but you know. Okay? I'm here at 16. Okay? This is where I got into calls. 16. It's down at 8. That's 50% drop. Well, if I sold it, I would lose 50%. But I have no intention on losing. Okay? So I'm in at 16. This week, I sold the 12s. And I brought in 64 cents on the 12s. Okay. Now, I didn't get that whole 64 cents. Okay? Because I rolled it forward from the previous week. Okay, previous week, right there. Is that it right there? Okay. No, that's last year. 15 cents. Right there. Is that right? Yeah, right here. Okay, so this week, 64 cents. See it right there? I bought back the old one, okay, the 12.50 at 49 cents. I sold this week's 12 for 64, but I only got a credit of 15 cents. Not quite 1%, but it's still something. That's why every day I look at it twice a day. Once in the morning with you guys, because you're part of the morning trading group, and once at night. I have no problem whatsoever bringing in, 14 cents, 5 cents. Look at this. I only got 5 cents this week. Five is better than nothing. Now, if I get 5 cents every single week, let's do the calculator. Where is it? Right here. Okay, clear. Okay, 0.05. Whoops. 0.05. Okay, 5 cents. Where the hell is it? Right here. 5 cents. Well, let's multiply it by 52 because there's 52 weeks in a year. Multiplied by 52 equals that. $2.60. That's if I get 5 cents every week. Okay. Well, what did I buy it for? Well, I bought it for $16. Okay, well, $2.60. I divide it by the $16 that I'm into it at, and I get a rate of return of 16%. Now, that's not close to my 50%, but 16% is actually not that bad compared to 5 or 10 years ago when you didn't know about weekly trading. Okay, so if you didn't do weekly trading like you're doing now, okay, you'd probably be happy with 16%. Most people would. People who've never heard of weekly trading would think 16% a year is a good return. I can't tell you what to do. I can't tell you to change your risk factors. I can't. But if you just take a look at the numbers. Okay, let's go here. Okay, let's get rid of that. Let's get rid of this. Okay, so currently we're at $8, and you're into it. I have no idea where you're into it. But if I go three to 4 strikes out of the money, because right now it's at $8.50. Okay, 3 strikes out is 10. And that's paying 4 cents to 6 cents. So right in the average is 5. That's 16% per year. I'm okay with it. I'm not 100% happy, but I'm not losing anything. Okay, to me, not losing is more important than hitting a home run. Anyway, I can't tell you how to handle it. You have your risk factors, and there's nothing wrong with it. If it works for you, great, awesome. Don't change. I'm not asking you to change. I'm just saying, if you don't like this week's, okay, go out the end of April. Okay? End of April, the numbers get a lot bigger. Okay, you don't have to sell every week. You can sell every 2 weeks, every 3 weeks. It's your choice. You can do whatever you want. But by changing the numbers, you can change. And then, if it gets too close, you can roll forward. If it gets too close to where you are and you're uncomfortable, well, just buy back this week's and sell next week's. Because next week's is always more money than this week is. Because you're looking at the time value. All right, anyway. How do you collect dividends when you are in an option? SV, how are you today? So you want to know, how do you collect dividends when I do option trading? Okay, so I find it rather interesting when people will read a sentence and make up their own conclusion. Okay, dividend investing for weekly cash flow. You automatically make the assumption that I'm buying the stocks to collect the dividends. No, I'm using the dividend as a precursor. Okay, if you don't know what a precursor is, kind of like a beacon, an indicator, spotlight, lighthouse, however you want to look at it. These are the dividends. These are the EX dividend dates. There's 4 dates to remember when you're investing in dividend stocks. Date number 1 is the announcement date. That's where the company comes out and says, hey, this is the money we made. This is what we're paying you as the investors, and this is when you're going to get it. There's 4 dates. Date number 1, the announcement date. Date number 2 is the EX dividend date. That's what this calendar is for. The EX dividend date is each one of these green dots. The EX dividend date is the last day the stock trades before the dividend's paid out. That means if you want to collect the dividend on Walmart here on the 21st, okay, Walmart dividend the 21st of March 2025, that's at the end of the month. If you want to collect that dividend there, you have to buy the stock before this date. The 20th, the 13th, the 5th, the 7th, the 28th, the 11th, the 10th, any day before that date. You can't buy it on the 21st on Friday and expect to collect a dividend. It's the day before. That's like when you go to the store and it says hours of operation, 9 to 5. If you show up at 5:05, bitch, moan, and complain all you want, you're past the time frame. Okay? If you want to collect a dividend, the EX date is the 21st. You have to buy it before this date. The 20th, the 19th, 18th, 12th, 14th, 5th, 7th, whatever. Before the EX date. Date number 3 is the date of record. Okay, now this one, it makes so much sense, it just boggles the mind. Whoever owns the stock on the date of record gets the dividend. That's it. If you own it the day after, you don't get it. Okay, you have to own it on that date. Date number 4 is the payment date. Self-explanatory, that's when you get your money. Okay, I hope that makes sense. So, I don't want the dividend. I want the insurance premium from the covered call. I'm using the dividend because stocks have a tendency to increase in value just before the EX dividend date. So if I want to buy Walmart, okay, I want to buy it 2 weeks before on a Monday. Okay? That way I buy the stock, I sell it, I sell someone the rights to buy it from me at the exact same price I just paid. Let me give you a quick example. Let's go to Wally World. WMT. Okay, let's go. Let's get rid of this. Let's go right here. Okay, so the dividend for Walmart, okay? Walmart's dividend is 23.5 cents. Okay, 23.5 cents for the dividend. All right, it is what it is. Now, if I buy Walmart at 85.43 and I sell it at 86, I get $1.27. Now, explain to me in a manner in which I'll understand why collecting the dividend, 23.5 cents, is better than collecting the premium, 127. That's 5 times the amount. And what am I doing? I'm buying it at a price, and then I'm selling it for the exact same price I paid for it, or close to it, as close as I can get to it. If I'm paying $85.43 and I sell it for $85, I'm picking up $175. All right, I'm losing a little bit here. You take it off of there, I'm still making over $1, which is still 4 times, 400% more than just the dividend. I have no interest in collecting the dividend. If I get it, fine. It's not my intention. My intention is to use it as a street sign, a beacon, a lighthouse, whatever you want to call it. It's like, hey, we're paying a dividend. Come by me and collect the premium. Okay? Walmart, here's the dividend right there. The dividend is 23 cents. Okay, great. You buy it, you collect the dividend. I'll buy it and I'll collect 400% more than you. Anyway, let's go on to the next one. Yeah, Lloyd's in the same boat. Like Gavin, please look at SoFi. Yeah, I already looked at SoFi. I gave you my opinion on SoFi. Can't help it if you don't like it. Constellation Energy was once part of Exelon. Okay, fine. What type of account on your broker do you have? Ooh, I have a corporate account. ADI. Okay. Stock and other things wants to look at ADI. ADI. Analog devices. I'm going to say no this week. Okay? You can't not see this. I mean, look. Okay, here's the bottom right here. 30 days ago. Shoots up. That's a nice run up from 200 to 245. That's a little over 20%. And then she drops down here. Yeah. Keep her eye on. I'm going to write this one down for next week because as soon as this finds the bottom, she's going to turn around and go back up. The 207s, the 205s going for $6. Hell yeah. Let's write that one down. ADI for next week. ADI. Okay, because if we find the bottom tomorrow, which means tomorrow will be higher, because I like 2 days to the upside. If this is the bottom, tomorrow has to be higher. And then Friday has to be higher before I jump in on Monday. Because that's 3 days. Okay, 2 days to the upside. If the third day is another upside day, I'll jump in. Because the numbers look really good. Okay? All right, we already looked at CEG. We're going to pass on that one. ADI, I just wrote that down for next week. Blast US. Oh, Blast us Centurion. Why does that name sound familiar? Where do you usually get your financial news? Financial Times, Economist, or Yahoo? You're under the impression that I actually listen to those talking heads. Nope, I don't. I get my financial news right here. Okay? What is this? What's today's date? The 12th. Right there. Okay? BDX paid the dividend. LIN paid a dividend. ADP, Albemarle, CB, that's Chubb Corporation, Coca-Cola, T. Rowe Price, they're paying dividends on Friday. That's where I get my financial information. Consistency of profitability. If they're profitable, I want to look at them. If they're consistently profitable, I want to invest in them. However, is the timing right? This is where I get my news from, right here. Okay? It's not that difficult. Dividend Kings, there's actually a list. Companies that consistently increase their profits. Dividend champions, dividend aristocrats, dividend contenders, Warren Buffett's list. That's 300 companies right there that are consistently profitable. Okay? That makes sense to me. I can't tell you what to do. I have no intention whatsoever telling anyone what to do. We've got 99 questions. We're going to stop looking at stocks for a little bit and then start answering some questions. So let's see what you guys got. QUBT. Never heard of it, but Armando, I'll write it down. We can take a look at it later. QUBT. Alrighty. Okay. Bob does life. Okay. What helps you determine rock bottom? Ooh, that's a good question. Need the glasses. Getting old sucks. Don't get me wrong, life gets easier as you get older. Okay, so here we're looking at analog devices. How do I figure out what rock bottom is? That's it right there. It's actually that easy. You take a look at the chart. It will tell you that's the high. There's the rock bottom for the year. Okay? Now, if you divide it up a little bit differently, okay, that's the year right there. There's the high, here's the low. Okay, the last 6 months. Here's the rock bottom for the last 6 months. Where's the high? Right there. Okay, so how do I find the 30-day low or the 30-day for the time frame? Well, tomorrow's the 13th, right? Well, here's the 13th right there. Okay, up, down. Now, how do I know that's the bottom? I don't. What I use to measure it by may not be the same where you use to measure it by. Okay, so let's go here for a second. Let's slide this way. Okay, now, you see this bottom right here? By looking at this 30-day chart here, there's the top, there's the bottom. How can you tell? You tell by having something next to it to compare it to. Okay, well, as the bottom there, because everything before it was higher, and that's the bottom. Well, the very next one is higher. Next one to it is higher. That's 2 days to the upside. If the third day is up, that's where I jump in, right there. And then I want 1%. So it opens up right here, third day higher. It opened up at 211.24, right there. See, the opening price, date, open, high, low, close, range, and volume. Okay, so on the 14th, third day to the upside, it opened up at 211. Well, what's 1% of 211? 211. $211.24. What is 1% of $211.24? 211. You just moved the decimal point over 2 places. 211. 1% is $2.11. It's actually that easy. Okay, I don't know why adults want to make it complicated. So, if I'm looking for a $2.11 move, well, it opened up at 211 and it went up to a high of 215. So I would have got in and out on the same day, still made my 1%. Now, I know 1% doesn't sound like a lot, but I'm not greedy. I'm a simple man. 50% a year is okay for me. I'm perfectly okay getting 50% per year. Christopher, Constellation, I got that one, 80. I already did that one. Okay, keep going. What helps you determine bottom? We just did that one, QUBT. We did that already. Bobby, what's happening? KD.post. Thank you. Weenie Hunt Jr. Cool. Bob does life. Cool. Sofu. Gavin, what the heck is... Oh, SoFi. We already looked at that one. I'm not going to look at it again. Gave you my opinion. K-Boot Post. We already looked at Cube. Mark the Realtor. Back again. Do you use call debit spreads, and what do you look for when using them? Okay, now I do. Let me give you briefly what I'm looking for on a debit spread. No lose trade. That's what I'm looking for. What do I mean? If the stock is at a certain price, if it is where it is, if it goes up, I make money. If it stays the exact same, I make money. If it goes down, I still make money. That's what I look for a call debit spread. Now, I give a lot away here for free. That's not something I'm willing to give away for free. Terribly sorry. Lisa Andino, how are you today? Eric, what's happening? AMS Intel went up after closing. Cool. Jimmy, investing in Tesla? Nope. Don't get me wrong. I like Tesla. I wouldn't buy one. But I don't know. If someone gave me one, maybe I'd have it for a little while, but I wouldn't keep it. Do you like stock Rocket Lab? No. Okay, Katie, I don't do Tesla. Kevin, I invested in Rocket Lab and made 33 grand. Good for you. Barry, how you doing? Babu Frick, how do you determine if you should or shouldn't invest into a company? Okay, Babu, it either makes sense or it doesn't. Okay, either you like it or you don't. Now, we are all different. Okay, like I said earlier, anywhere between 20 and 40,000 people will come across this channel through the day, every day. 10 and 20,000 people. But they're not all looking for the same thing. We're all looking for something different. I have no idea what you're looking for. That's why I tell people, if you really want to talk to me, DM me with your phone number. I will give you a call. Okay, you guys on YouTube, my phone number is on YouTube, if you look. I'm not going to tell you where it is. Okay, and I do have a spam filter. So if you call, you got to leave a message, and then I'll call you back. All right, so let's keep on keeping on. Ooh, Popeye wants to look at Clorox CLX. Wait a minute, isn't that a monthly? I'm not 100% sure, top of my head. CLX. It is. Sorry, dude. I don't do monthlies. The numbers just don't work. All right. What is this? Andre, how are you doing today, Andre? Okay, Chase, we already looked at DEC. We already looked at CEG. Ditto, no politics. Thank you, Lloyd. Gary Slot, great content, great job. Got to go, keep it up. Thank you, Barry. Long Ray, you had a calendar which showed when dividends were due or the EX date. How do you set that up? You don't. It's already there. Okay, right here. Monitor, trade, analyze, scan, market watch. Under the market watch, quotes, alerts, visualize, finance rates, calendar. Okay, there it is. Okay, right here is where you take a look at all your lists. Okay, if I pick a list right here, look at all the lists I can take a look at. Okay, here, a whole bunch more. There's a whole bunch of lists you can take a look at. Now, I have my own personal list because of certain stocks I like. Next question. Andrea, look at who owns Kohl's. They don't just own Kohl's. Ooh, Andrea, I'd like to know that one. Anthony, it is hard to say, stay away from politics nowadays. I sent you a message about a morning 10-minute. Okay, I'll take a look at Anthony. Do you want me to call you tonight, or you rather me wait till tomorrow? Because I'm going to be up to like 1, 2 o'clock in the morning because I just am. Try Nolan, or Tier Nolan. Tier Nolan wants to look at Verizon. Yeah, I'm going to say no to Verizon for this week. Okay, 30-day bottom, 30-day top, profit taken. Yeah, it's going to be maybe next week before I think about Verizon. But I'm writing it down for next week because as soon as it finds the bottom, see, like right here, bottom here, shoots up, wait for a bottom here. Okay. Rachel, how are you doing today? Cade Bishop. Mama Rama Bear. Mama Rama Bear, how are you today? Okay, Tier Nolan, how do you feel about legal cannabis industry stocks, ground level? I don't do anything unless it has 2 decades of increased profitability. Okay, so cannabis only became legal recently, so you got another 15 years before I'm actually interested in anything of that. King of Oneself, cool name. Mary June, okay, I'm listening. How you doing, Miss Mary June? James David, it's a $3 trillion company. Really don't care. Either it's 20 years old with consistent profits or it's not. Okay, take a look. Think of it this way. The stock market's been around for 23 years. 423 years. There are companies that I invest in that are 100 years old. If the company you're asking me to take a look at is not at least 20 years old, I don't want to look at it. Terribly sorry. They could have the nicest people in the world working there. They could have the greatest product and the greatest profitability. No desire whatsoever. Terribly sorry. All right, we already did in Verizon. They lowered dividends. Okay, I have no idea who you're talking about. Thoughts on Huma. What the heck is Huma? Huma. It's a no is what it is. Imagine that. Monthly options, I don't even bother. Not worth my time. Kohl's is highly leveraged. Okay, CA all day, I get what you're saying. I really do. However, look at the factual numbers. What is the revenue coming in per share? That means they have a certain amount of shares out there that people own. Each an individual share, how much revenue is coming in as opposed to how many shares that they have. We looked at the numbers. It's over $100 a share coming in revenue. That means cash coming in through the door. Okay? It's either you like it or you don't. If you don't like Kohl's, don't do it. Some people can't stand the heat. You don't like the heat, stay out of the oven. If you don't like the game, don't play. It's that simple. Okay, Kohl's has been around for a while. The numbers look good. Yeah, they're having issues. Why are they having issues? Ask the question, why are they having issues? MPW, my long swing trade. The trend is your friend. MPW, what the heck is that? MPW, isn't it? Wheaton Precious Metals. Interesting. MPW. WPM, sorry. WPM. All right, Wheaton Precious Metals, $71 per share. Okay. Oh, okay. Now, I got a little bit of an issue with WPM. 3, 9, 10, 7, 14, 12, 10, 9, 7, 6, 5. That's going backwards, dude. Okay? When I say consistency of profitability, number one, it doesn't have 20 years. No. There's 9,976 stocks. Why the hell am I looking at this one? When I say there's 300 companies that are consistently profitable, why am I looking at this one? Okay? It went from, the dividend kept going down, and look at this, 2014, 6, 2015, 5, 2016, 5. It didn't increase whatsoever. Sorry, you may like it, no problem whatsoever. You do what works for you. I'll do what works for me. I don't try to tell people what to buy. I have no problem whatsoever looking at what you're buying and giving you my opinion. Well, like I said earlier, my main concern is consistency of profitability. If the dividend is a portion of the company's profits that they give back to us, okay, the investors, we're the investors. We buy, we sell. That's what we own, part of the company. We are entitled to a portion of the profits. If the profits are going backwards, okay, 9, 10, 7, 14, 12, 10, 9, 7, 6, 5, that's going backwards, dude. That doesn't work for me. For me, that's a no. That's just for me, though. NOG. Okay, we're at 11:21. We got 9 minutes left. I'm not going to look at any more stocks. I got a bunch of more questions to answer. Right. So you're a Buffett-style guy. That's not what I said at all. What I said is, if the company is profitable, I will invest in it. There's 300 of them. Buffett buys companies and never sells. I have no intention whatsoever of holding on to anything. The longest I've ever held anything is 9 months. And I didn't do it because I wanted to. I bought, what was it? Kimberly-Clark, KMB. I bought it and the sucker went down. And then it stayed at the bottom for a while and it came back up. 9 months I held on to that stock. Now, I collected 3 dividends and about 33 premiums. So I made out okay on the company. But it did tie up quite a bit of my money for 9 months. Anyway. NOG, no. Here's one, HIMS. Andrew, terribly sorry. HIMS has not been around long enough. Okay? HIMS. This is why I tell people, always have at your fingertips a financial website. Find out the information that you need in order for you to feel comfortable. Now, who gave me this one? Andrew. Andrew, you see this? There are no dividends in a selected time period. So HIMS has no dividends. So how do I know if they're profitable? Well, I have to read all the quarterly reports and annual reports. No, thank you. And then I have to watch the stock chart to find out where a good trading pattern is to get in and out. No, thank you. Too much effort. I'm a lazy trader. Really, seriously, I'm lazy. 10 to 15 minutes, I make 1%. Now, you may think that's not good, but think of it this way. 10 or 15% a day, okay, is under 1 hour a week. Now, whoops. Hold on 1 second. Okay. Just for shits and giggles, think of this. All right? 117,000. I dropped in another 21. Okay, so that takes up to 138. $138,000. 1% of $138,000 is $1,300. 10 or 15 minutes every single day comes to 1 hour a week. 1 hour a week for $1,300 on account number 1. 1 hour, $1,300. Explain to me how that's not good. Look at account number 2. 100,000 cash, 100,000 margin. That's 200,000. 1% of 200,000 is $2,000 for 1 hour. Explain to me why that's not good. 75 Corvette. I love 75 Corvettes. Nice sleek lines. Ooh. Home Depot. Love it. Quantum Antenna. Nice to see you again. Mary June. Gotta go. Good night. Thank you. See you tomorrow night. Thank you, Andrew. Sorry that I didn't like that stock you like, Andrew. I mean, I'm strictly a numbers guy. Either the numbers work or they don't. Bridget Williams. AEM. What the heck is AEM? It's not a good sign, Bridget, if I have to say, what the heck is that? AEM. It's a no is what it is, Bridget. Sorry. 2 reasons. Number 1, look at this. It's at the high of the year. Yeah, no, thank you. Reason number 2, monthly options, which means I can trade it once a month, which means I'm going to get, what, 12 to 24%? No, thank you. I prefer 50% to 100%. So I appreciate the interaction, Bridget. Really do. Thank you for stopping by. But I'm looking for consistency of profitability. That's number 1. Number 2, weekly options only. I can't do weekly income for a monthly optionable stock. That means I'm going to have to sit in front of the computer and look at it every day. Yeah, no, thank you. All right, 5 more minutes. All right, we're done over on... Really? All the questions are done on TikTok? Cool beans. You like my style? The trend is your friend? Thank you very much. Right, so you're above it style guy? No, I'm not. Okay. JBLU, JetBlue, hell no. It's not 100 years, it's not 20 years old yet. Thank you. Good night. Long Ray, see you tomorrow. Well, maybe I'll see you tomorrow. I don't know. Bridget, absolutely no problem. I'm here every single night, 9 p.m. until 11:30. I'm not here on Friday nights or Saturday nights, but for the most part, yeah. Heidi, thank you. You're welcome. Lyft, okay. Ashok, Kumar, okay. Remember what I told you? 2 decades, 20 years of increased profits. Lyft is not even 20 years old yet. TPL. Chris, Do you see the yo-yo type stock drama selling down anytime soon? You got it, Chris. I appreciate that. Can you explain that in a little bit more detail? Lisa Andino, I'm trying to learn too. Okay, Lisa, I'm here every night. Okay, it doesn't cost you anything but your time to show up. You can ask whatever questions you want. That's why I'm here. If it makes sense, great. If it doesn't make sense, ask a question. I will answer the best of my capability. I do answer each and every individual question. It may take me a while to get to your question, but I will answer each and every individual question. Now, seems that we're out of questions. It's 11:27. I'm going to quit early. Unless you guys can hit me up with a question within the next 2 or 3 seconds while I'm getting ready to turn off all the phones. All right. So, Susie, nice to see you. If you're still there, send me a DM. We should chat sometime. Have a great day. Bye to you guys on Facebook. Instagram, you're next. Oksana Kagdala. Spasiba. See you tomorrow. Alrighty, and okay, whatever. Okay, so you guys over here on TikTok, have a lovely day. Victor, just getting ready to leave, dude. Sorry. Okay, Chris. We seem to fallen off the cliff one day green. I have no idea what that means, Chris. Next, thank you very much. You're welcome. Catch you guys again tomorrow. Remember, tomorrow night, same bat time, same bat channel. Some of you probably don't even know what that means. All right, so you guys down here, lovely seeing you.